and welcome to Pro Trader Strategies Market Commentary for Friday, September the 25th. I'm Eric Wilkinson, and yes, you very well may recognize me from mainstream media where I've talked about the economic data, the geopolitical environment, how that comes in to impact the overall markets with my market analysis. I'm going to do the same thing for you folks out there in these daily market commentaries, but I'm going to go a bit further and talk about these option strategies that I'm implementing into my portfolio based on those market assumptions. And it's not just picking an option strategy out of the hat. No, what we do is over my 25 years of experience trading, I know when, where, and why it is the best time, place, and strike location to implement any option strategy. So what we try to do here at Pro Trader Strategy is streamline that process using specific guidelines for you to implement any option strategy. You come up with a bullish assumption. We look at that underlying, find out where the implied volatility is around that underlying, and see if those option prices are cheap or expensive, because that's what's going to determine our option strategy. So please follow along with us in our webinars and the roadmap to trading options, which we're doing currently right now. That's the current course. But without further ado, let's get on with the overall economic data and see how the overall markets are reacting to that. Well, we got core durable goods. That basically strips out some of the more volatile aspects of those of that number. For instance, it's going to strip out transportation items. The reason why is because that's going to fluctuate a little bit more greatly. It's not every single month. It's not a constant purchase type of thing. But core durable goods, stripping out the transportation, coming in at 0.4%, expected to be 1%, so a little bit worse than expected there. They did revise last month's number up, albeit just slightly. But when you put back in those transportation items, it came in just below also at 0.4%, expected to be 1.1%. The revision to last month's number up a couple of tenths of a percent. One of the things with with durable goods is it is a manufactured product that's supposed to last longer than 3 years. Well, that includes like automobiles, obviously, which we just talked about, transportation, computers, appliances, and airplanes. Well, it doesn't seem like computers and appliances last more than 3 years anymore. So anyway, that was a funny thing I just thought of this morning because I'm having issues with my refrigerator that is not quite 3 years old. The button for the dispenser is not working. So anyway, any durable goods, yeah, that's a little bit of a vague area, especially with things like computers and our widgets that we have now that are all computer operated. All right. Enough of my soapbox. Let's get on with it. All right, we've got crude oil. Well, we've got worse than expected economic data, right? Well, we've got crude oil kind of hovering in that $40 a barrel. It is holding on to this. That $40 a barrel handle is looking like it wants to be here to stay. We're creating that volume node there. Market's getting really complacent until we see some real serious numbers like this re-outbreak or revergence of corona over across the pond, and manufacturing sector really starting to kick up. People aren't afraid to get out of the house anymore. We're probably going to see this particular asset not move too far above and below this $40 mark. We're, maybe go up and test 45 if we start getting some good manufacturing numbers, and we could break below that 40 handle and maybe test 35. So it looks like we're stuck in about a $10 range here with crude oil futures for the foreseeable future anyway. All right, gold futures off by another $12 today. Yesterday climbing, just trying to create a bottom, and I actually got into a GLD trade that I tweeted out to you guys to make sure that you guys could play along there, at least keep track of what I'm doing. Not a confirmation. I thought we were going to get a little bit more of a bottoming pattern here with that green doji right here and get a confirmation to the upside. I mean, we're not out of confirming that yet. We've still got the rest of the day to go. But at this point, I would not say that that is any type of confirmation. It hasn't broken the pattern. We start breaking below this area. That's where I'm going to be looking to cover that trade that I talked about in GLD here in a minute, or that I will be talking about. Bonds moving higher by another 9/10, back up into that area, 176 25, 177 handle is really where I'm more looking at as a ballpark. We are back up into the area where the point of control is, starting to want to migrate back to that. We do have the 50-day simple moving average coming very close to that point of control, which would normally kind of signal a support or a resistance. In this case, it would be a resistance bumping our heads up against that 50-day moving average to try and get going. Well, since it's lined up quite nicely with the point of control, right here is the point of control. That's the time and volume. They both are lined up quite nicely together. That is a magnet. It really wants to draw the markets back to it. And then we have the 50-day right here, simple moving average. Now, that normally, like I said, would act as a resistance. It's probably not going to be as strong of as a support and resistance because of that point of control. And we got this little volume node right here, so that's slightly above where we are. So we could easily see the market kind of pinging back and forth above and below that 50-day moving average, rather than it acting as a support and resistance. All right, VIX is slightly off on the day, as you can see, very near the lows, but that's because we're seeing some equity push to the upside. Yes, we got the Dow Jones right there at that same point of control. Is it acting as a magnet like we were talking about with the bonds? Yes, it is absolutely going to act as a magnet and be a very comfortable zone. It's that woolly blanket where people have bought and sold, transacted the most. Well, those people, if you consider most people have transacted at this level, they're very comfortable with it. We have, when we get to extremes, that's where we see comfort levels start to spike, uncomfortable levels start to spike, because if you're long, you want to cover, and if you're short, you want to puke. When you get outside of that range and get to those value area highs and stuff like that. So when we're talking about value area highs, I thought I had my pen ready to go. I wish it would just automatically go for it. This is what I'm talking about. This is a value area high. This is a value area low, but that is value area low. I wanted to write this for volume. For volume, I'm just going to put, and this is the value area low for time. For time. All right, so we do have several, and you can see that both of those, there's two little lines right there. That is for the volume and the time. So when we hit those extremes, that's where you start seeing the angst, if you will. But we're right here at the point of control, and that is, like I said, our POC. That's where we're going to see a comfort. It's going to be a little bit more difficult to break out of that. Plus, we have a nice support and resistance here with the 200-day being a support. We got support here and we got resistance here on the 50-day. So, that's going to dually act as a banging point for, banging up against the resistance, hit our support, but we're pinging right back and forth in and around that point of control. So I don't think we're going to see a whole lot today as a market move. Yesterday we did see some late day action, but usually going into Fridays, it starts calming down a little bit. Here we can see the NASDAQ up 115 points on the day, up 1%, and near the highs. Something to note here, we talk about this a lot also, near-term bullish, bearish sentiment, if you will, is trying to get above that 9-day simple moving average. That's short-term bearishness and bullishness. We've been below that for quite some time now, and a break above that would, get the bulls a little bit hopped up. All right, and then we've got the E-mini S&Ps up 15 points on the day, about 0.5%, right there at the point of control. That's the volume point of control, that red one, but I'm a little surprised that it looks like the volume's down here. I've got to do a little bit more investigating. I think it's literally because we've got all of this volume going on there. It's drawing that up there to create that synergy between the value area high and the value area low for the volume, because you can see right here is the value area low for volume, value area high, it's in yellow. So the volume is kind of pushed to that upside there. Yes, we do have this Fibonacci. It is lined up with the point of control again here. So is it going to act as severe of a support and resistance. Right now it is, but I think that it could easily pop above or below that and not really be a great signal as we've gotten above this resistance area. So now it's going to act as a support moving forward there. All right, so then we've got the E-mini S&Ps breaking it down on a 30-minute candle chart. Overnight inventory very short. Coming into today, yes, we flushed them out, got the full range there, but very close to an inside day. Yeah, we got the value area high, just slightly higher than yesterday's value area high, so that kind of breaks that theory on it being an inside day. But it feels like a very inside day where there's not a whole lot of momentum. We rallied on those economic data points, maybe because they're saying, hey, this is a signal, you guys. It's a little bit behind, but that being said, that's a signal that we need to have some more stimulus going, and maybe the market's reacting to something like that. All right, let's talk about the trades that I've done. Yesterday, I talked about this on Twitter. I threw it out there, what I was doing, and I went into the October, and with this having some pretty good volatility, I decided to sell some puts in there. I went in there to sell some puts in there, and the reason why is because my thought process was that if the market really started falling off, I wanted a little bit of protection there and get some positive deltas as there would be a flight to safety, rotation out of equities and into the safe haven of gold. So I decided to get in there with the higher implied volatility, and if volatility starts coming out, that'll help me as well. So went in, like I said, the October that expire on the 16th. I went into the October, sold to 166 puts in there for 79 cents. Getting a little bit of a move positive in my favor here today. Also, that volatility coming out, making that trade look quite nice as of right now anyway. All right, and then Costco. I talked to you guys yesterday in the daily market commentary. Earnings yesterday after the close. They came in and beat. Market really celebrated it for a moment, and then all of a sudden the market started falling out. Well, I was worried about that this morning, and I got a bit of a late start on covering this trade, so I didn't get the best out that I could have. Obviously, if I would have kept it on now too, it would have been worth about 10 cents less, but at the end of the day, it's still a winner, and I'm happy to get out for that profit. So I went in and went into the September weeklies that expired today, sold the 327.5 puts in there for 68 cents, bought them back for 14 cents today. Like I said, I think last I checked, I clicked back and saw that they were trading at about a nickel or something like that. So I don't care. I'm moving on with my life and going to talk about another trade real quick. Let's talk about Slack. This is the trade that I was actually considering and used as an example in my webinar yesterday that I did for the straddle option strategy. This is a pretty good example of that. These guys have really not participated in this upside like we saw with other CRM type of softwares. They have 2,000 apps out there. They are knocking it out of the park in this stay-at-home kind of environment that we have. Businesses are using them. They're really seeing the users ramp up quite nicely. They beat on their earnings. They were supposed to come in with like a negative 13-cent earnings on their last earnings call, right, as you can see here. So better than expected. And the market's just really not loving what they're doing. And I'm not sure as to why. But with that being said, you know, if the market hates on them some more, then I'm happy to see that drop happen. And if they start getting recognized, they get the pop, right? So this strategy for the straddle is the pop or drop strategy, for lack of a better connotation there. So with work, which is Slack technology, I went in and did the December, getting that longer duration, trying to limit some of that theta decay, right? I also got really low volatility, so I know the premiums are pretty cheap. Yes, it is coming off just a little bit today, but at the end of the day, we get that pop to cover the gap and come back up to the point of control, which is kind of what I'm expecting to at least to happen, or we get that drop where they start falling out of bed and testing the value area low. So the beauty in this is when we were talking about magnets, we've got a point of control way up here and another point of control down here. This one for the volume, this one's for the, this one is for the volume, this one is for the time. So we've got counter-opposing magnets. Some could believe that we are going to build up in between those two areas, build out a nice big profile, a nice big arc where, you know, you got the long tail and you get a kind of a flipped on your sideways standard deviation curve. And that's kind of what the market profile symbolizes here. Well, that is quite possible. I'm going to have a short leash on it, like I talked about in the webinar, on how to cover this for a loss and how to cover it for a winner. So I get the pop, I get the drop. That's a win on both sides. So I went into the D's and bought the 28 straddle in there for $6.57. Now you get the pop up to the value area high, which is easily conceivable. I think it's probably leaning the odds towards that upside there to test that area. Then I'll be able to see this profitability start to crank on the win column. Also, you notice we've got a binary event in that contract that I decided to pick. Why did I do that? Well, it's all part of the method of the madness, right? We want to have a binary event in there because heading into binary events, you can see right here heading into this binary event, we got volatility expanding into this one. Not a great volatility expansion, but volatility expansion nonetheless. And you can see, you know, in regards to the location of when I got in, you know, it'd kind of be something like this, where we can see that volatility start to increase heading into that binary event. So that all of those things will work in my favor, especially if I start getting a move. So heading into that binary event, I do expect volatility to at least start to creep back up heading into that event, which will help with this position because volatility increases the premiums. And since I'm long premium, I'm long volatility. So that's how we set that all up. And I think that that's about it for what I've done. We talked about the Amazon yesterday. So yeah, I got everything covered that I wanted to, other than one last thing that we do need to talk about is please take a moment to go over the disclaimer. We are an educational company. I'm not trying to solicit you guys into jumping off this cliff with me on the specific market assumptions I come up with. Yes, I do want you to learn how to implement these options into your portfolio, but I want you to do that according to your own assumptions and risk parameters and what is appropriate for you. You know, you guys might think that gold is bearish. I don't want to change your thought process on your directional assumption for something. What I do want you to do is to take what is going on around that underlying you have a directional assumption and implement the right strategy, because that's the only way to turn the tables in your favor. All right, so have a great weekend. I'll see you guys all again on Monday, and if you can't take that, take it easy.